energy, 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 energy.
Yo, what's up, guys? This is Mystery Blues FX, and we're back with another one, guys. You know, it's that time of the year where we gotta keep pushing. So yeah, guys, I'm gonna speak about fair value gaps only in this video. This video is strictly on fair value gaps only, so it will be a quick short one, about 10 to 15 minutes, I'm not sure, but let's get to it. So first of all, let's begin the video with taking this is the CPI fair value gap. That's the gap that the CPI left. It was tested yesterday, which I really love, because I'll explain what happened. I really love why it tested the fair value gap yesterday, because that shows you what I've been talking about this whole time, these past few weeks. So this is the CPI fair value gap, right? This was the high that was broken. Gotta love Nasdaq. So smooth, so clean. Okay. That was the high taken. And which law are you gonna use? Okay, we can use this law. This law was the one taken first. Actually, like I'm focusing on this range. From here, I'm focusing on this range, strictly that range. Let's change that, because a low, let's mark it with red. Okay, so what I love about Nasdaq now. So what happened? So this was a market maker structure shift. Nah. So we will focus on fair value gaps after market maker structure shift. So what happened here was that, okay, Nasdaq took the high. After taking the high, it took the low. But focus on this. Look what happens here. After taking the high, it leaves fair value gap number 1, right? That's fair value gap number 1. Then after that, there's fair value gap number 2. We respected all of these. I'll explain what's happening in them. Like I just want to mark them real quick. So yeah, then there's fair value gap number 3. All these valid entries, valid sell setups. Okay, so let me show you what happened here. I think I will have to move to a lower time frame for the others. So okay, this first one, we broke the high. After breaking the high, let's go to the 1 hour chart. Maybe there's a low that we took. Yes, exactly. So after breaking the high, there was a market maker structure shift at this point, because we broke the high and came back and took the low. After taking the low, the liquidity at the low, we came back, entered the 4 hour fair value gap, went lower, right? That's what happened. So let me mark this as the 4 hour SIBI. Sell side imbalance, buy side inefficiency. So that's the fair value gap, the 4 hour fair value gap there, right there. So what did we do? The market broke the high first. The high created right here. After it ranged. So it broke the high here. After it broke the high, it came back, broke the low. So at this point we knew, okay, market maker structure shift. This is a market maker sell model. So after we broke the low here, the market went back into the fair value gap. After going back into the fair value gap, we went to lower prices. We broke another low. Let's go back to the 4 hour chart. So on the 4 hour chart, you see that, okay, after taking these lows, it's that one and this one, right? After taking those lows, we came back to the fair value gap we left. This confirms the market maker sell model even more, because we break a low, we come back to what? A fair value gap, lower prices. Yesterday, I love what happened, because we came back into this CPI fair value gap. I've been mentioning that with this CPI fair value gap, we will not respect it. We cannot respect this fair value gap because the amount of liquidity in this area is too much that the CPI left, and which was weeks back on the 14th of November, which was a few weeks back, going close to 3 weeks now. So since we left this much of a gap, we have to close this area and break lower. The market needs to balance itself. As I always say and use the analogy of, when you paint, you go up, right? When you go up, you have to come down and fill in the spaces. That's what a fair value gap is. The spaces that are left. So you have to go up when you're painting, but come back down. It's a must to come back down and fill in the gaps that you left. It's really a must. So what happened here is that, first, let me start over. Just to recap. So we broke this high, right? After breaking this high, we broke a low. What did the market come back into? The 4-hour fair value gap. We went lower, broke more lows, right? After breaking more lows, here's another 4-hour BC. No, 4-hour CB rather. So in this 4-hour CB, we came back to it, right? Respected it, went to lower prices. Entered this CPI fair value gap, the CPI BC. After we entered it yesterday, the market bounced off it, running away aggressively from it. But from a perspective of people who don't know what's going on in the market, at this area they would say, this is the low of the month, we continue to buy. But no, if you know what's happening, look at this. There's a fair value gap that we left after breaking the lows. So market maker sell model is confirmed the third time. After taking the lows at this point, right? Let me mark it even more. Gets better. So after taking the lows at that point, look what we did. We came back. So this big red candle left the fair value gap, the gap here, and we came lower, tested this CPI fair value gap, and did what? The green candle went back into this fair value gap, and as you can see now, the other 4-hour candles are going lower. And if you see what the market tested, it tested this area right here called a breaker. But I won't go into breakers in this video because we are focusing on what? Fair value gaps. Practically, we are focusing on market maker structure shift, including fair value gaps. But yeah, so in this area, you see that, after taking the low and entering this area, people may have thought, we have the buy, we are happy. But no, you'll see. Today, it's going to go lower. The next day, it's going to go lower. Range. And keep on going lower. Because one thing about December, you can check the past few years. It's always a consolidation. It's the seasonal tendencies of this. It doesn't get much more easier than that. Seasonal tendencies. I'll go to seasonal tendencies, but I rather focus on this to make you understand what's really going on here. So when you look at things here, right, you'll see that you'll find that as we are going lower, this 4-hour candle closes in 38 minutes, right? You'll find that we're going to leave this gap, right? After leaving this gap right here, this is another 4-hour fair value gap. We're going to go lower, break this low. The market will come back, retest this gap, go to lower prices. So every time we break a low, let me explain it much more simpler. Every time we break a low, so first we break a high, then when we come back and break a low, there's a market maker sell model, right? After taking that low, we go back into the gap we left, which is the fair value gap, and go to lower prices. Sounds like I'm complicating it. Let me explain it in simpler terms. When you are painting, the painting analogy is the simplest one. When you are painting, for example, here's the best. You start at the bottom of the wall, you go up, and you go up. But look at the gap that you left here. You have to come back and fill the gap. So you always go up and must come down. This is physics, literally physics. What goes up must come down. Simple as that. So it can't get more simpler than that. So in this, I practically explained why the market is going down right now and why we're looking for lower prices right here. because of the void that CPI left here. The imbalance. There's so much imbalance that it left here. So much liquidity. So many sell stops it must take. So yesterday what it did was take all the sell stops that were lying above these wicks. So all the retailers who put their sell stops here, they were raided. And they probably lost money because it went into them, came out. Right? And us, ICT, I'm an ICT student. So as soon as I see this, I know, no man. The green candle that's going to come next is going to come into this area. After coming into this area, it's going to enter it, then go lower. You see, simple as that. After taking liquidity, it's going to come back into the fair value gap and go lower. So yeah, this is what I just wanted to explain here. It's just a quick video on fair value gaps. Like, I'll go into detail on other videos, but the next video after here will probably be about an order block revisit, because a lot of people are still confused by order blocks no matter how simple I make them, but they are still confused by order blocks. So I'll go back into that and revisit order blocks. Then I'll revisit fair value gaps, because I also want to teach things about the Fibonacci a lot. Like, I want to teach about the 72% marker for Fibonacci, what happens there, how to know if a market isn't a premium or is in a discount, how to know that liquidity has been taken with a wick or a body, things like that. Like, I speak on psychology a lot. Like, I release a lot of audios. Like, yesterday I released an audio on like a lot, like pivoting, all that. So yeah, guys, but I hope you enjoyed that, guys. It was a little something, Yana. Yeah, this December I haven't traded in like weeks, like I've been off. Like, I've been analyzing, tape reading and all that, but I haven't been trading because there haven't been good conditions. But anyway, guys, don't forget to like, share and subscribe. You know, guys, it's the Sombonyo way, the Sombonyo level. Yeah, let's keep on making money, guys, rather. Yeah, let's keep on pushing. We got this, guys. Thank you.
Woke up like this, I'm going big. She gave me a kiss. Mwah. That nigga sick, I'm going big. I am a king. Yeah, nigga, I'm in. They couldn't close all the gates cause I fit. Kicking your shins. I got no time for no quit. T63 in the mill. Now that's the deal. I'm getting bigger and bigger, I mean. Little by little.